Hi everyone, this is Brian Neal with Tradetobefree.com again, and today I'm going to talk about one of the most bullish chart patterns that is not really well known in the trading community, but it's a very profitable pattern and smart traders know how to find these and to trade these patterns, so you want to have these on your radar. I'm going to talk about today the bullish inverted J pattern, and this year we've actually had a few of these that have made really big moves for us after they've been released in our newsletter. So I'm going to show you exactly what the pattern is, how to identify it. I'm going to show you the target entries, stop loss points, and good targets for this pattern. And I'm going to also tell you more about the latest inverted J pattern that we found in our newsletter and share that with you as well. As the name suggests, the bullish inverted J pattern is a pattern that looks like a J inverted on a chart. Okay, sometimes it's referred to as the inverted ascending scallop. So if you've ever seen a scallop and what it looks like in the ocean, apparently this is what it looks like. If I don't eat scallops that often, so I can't say this for sure, but apparently it looks just like a scallop, inverted. If you can imagine the letter J and then flipping that on its side like a page in the book and then flipping it over, that's what would show up on the chart. And here's a great example on our website, Tradetobefree.com, and our list of top bullish chart patterns on that site. And this example here is one of the first ones we found in 2016. This is Hawaiian Airlines. Now, as with all the companies and stocks that we feature on the site during the free trial, and if you subscribe, we only feature stocks that are beating estimates with rising future expectations and or top growth stocks. Now, in this case, Hawaiian Airlines was showing strong growth, was beating expectations, and had the rising estimates. So all those factors, along with being in an industry at the time that was sort of bucking the trend in the overall market. At the time, the price of oil was taking a nosedive, and that was actually benefiting the airline industry. And so we were looking at that industry and the top stocks in the industry and looking for good chart pattern setups, and this is what we found. The first thing that you want to do is look at the width of the pattern. Now, ideally, the pattern is not real wide, so if you see one of these sort of curling pattern, it's inverted J, if you see this on, say, a 3 or 4 week time frame or a 1 month time frame instead of in this case, which took 2 or 3 months to develop, narrow patterns like that are actually often better. This one had a lot of height to it, which is really good. From the lows here in late August of last year, of 2015, as I record this, to the highs in December of 2015 when this chart was created back early this year, the stock made a 100% move within 2 or 3 months. So that's a really good start to the pattern. If you can find one that has a 30% move, 40% move, 50% move, that's often very good as well. Okay. Now, when the stock reaches its peak, it starts to curl over and it comes down. That forms the right side of the base, that curling pattern. You want to see that. Now, ideally, this initial move and curling and pullback will correspond with a Fibonacci level, let's say the 382 retracement, okay, or a 50% retracement, somewhere in that area. More than a 50% retracement of this first move, and it's not as good. So in this case, I think it was, just a little bit more than half the initial move, which is good. Okay. So now, what's the target entry on this pattern? Well, so here's the chart, the latest chart now, and you can see here back in early January or so, this was at the point where we featured it. So it's the actual right side of the J pattern. You can see that it makes a first move up here, and then it pulls back again. This almost corresponds. This pullback almost corresponds with a long-term uptrend support that I'll show you in a minute here. That higher low at this point, where you see the strong rebound off this level here in early February, and that big move starting the other way, that's an ideal entry point. Okay, that higher low, that definite higher low that's being generated. And you can even wait until the prior high is exceeded, and in this case that would be around close to 38, and with all that momentum, that would have been a really good entry point as well. From that point on, one thing you can do is you can take the initial move, which again was $20, you can take half that and project that on top of the pattern. So take half of $20, that's $10, add that to the 40, that gets you $50, and you can see in this case it went to 51, a little bit higher than that before it pulled back again. Now, some say you can go ahead and just take a full projection of that initial move to the top of the pattern, and that's to be more aggressive, but that would take you up to $60 per share. Okay, and it looks like it wants to move in that direction at this point as well after a big earnings beat on, I think, Thursday night or Friday when they came out with that. So yeah, so that's the inverted J pattern. Another good entry point on this is also a move above the high of the pattern. That's sort of the classic entry point. If you do play that, you want to see a close above that top. Okay, you want to see it close pretty strongly, and then you put a market order in for the next day at the open, and then try to ride this price higher to that $50 target. Okay, and that would have been a good entry as well. As we can see over here too, that once it's making that higher low, that first entry point I was referring to, once it makes that higher low and it starts to regain these moving averages, the 20-day and 10-day moving average, and it starts going above the prior day's high, that can also be a very good entry point as well, and actually give you a little better entry with a tighter stop loss. Now, the stop loss on this pattern is typically below the prior low in the pattern. So in this case, if you're buying here at around 35 in mid-February, then your stop loss would be below this low here. If you're buying a little sooner than that, then the low here is generally where you put your stop loss. Another thing you can do too is you can play a tight stop loss if you get a really good move above a resistance level. So in this case, you get that strong move off the moving averages. You're breaking this resistance here at $35. That often acts as fairly strong support. And there's also, in this longer term bullish pattern, when you get that move off the moving average like that, you often have a 1-2 punch where you have a lot of traders jumping in at that point, and the stock will take off from there. So that often acts as a strong level of support. Not always, but often does. So if you want to play a tight stop loss with this chart pattern, you can put a stop loss 2-3% or so below this $35 level here if you're getting in around that point. Okay, so you always want to drop that stop below the support. Try not to use just arbitrary stop losses. You don't want your stop loss to be too wide for your own needs and your own personality as a trader. But if you have a support level nearby or a former resistance level, then you want to use that to your advantage and drop your stop loss just below that. Okay, so all right, that's about all I have to share with you on that pattern today, and that's the basics of it. You'll find these a lot in the market. Now, one thing I want to point out is that you want to find these in bull markets. Okay, this is a momentum trading pattern. It's a swing trading pattern. So you hold the stock for generally more than one day, and usually it takes a few weeks for the stock to reach its target, as it did in this case. So dropping a tight stop loss just below this high here on the right side of the pattern, or this high here, or this high here, say 2 to 4%, is a great tight stop loss to use with this pattern if you want to do that. And if you go with tighter stop loss, it's going to reduce the number of winning trades that you have, but it will also keep you in the best trades and also avoid the ones that get off to a slow start, which is probably not where you want to be anyway. So it's really up to the trader, up to the individual to decide whether you want to play with a tight stop loss or a wider stop loss. But again, you want to look for these bullish chart patterns in bull markets, where the market's making higher highs and higher lows, or at least when the industry is making higher highs and higher lows. In this case, this stock was in an industry, again, that was doing well despite the downturn in the overall market. Okay, well, that wraps it up, and I just want to mention that we do have a website. We have a blog on our site, and we also have a book that teaches our swing trading methodology in more detail. And if you go to our site, you can actually sign up for a 3-week free trial. There's no credit card required for that 3-week free trial as I record this. And be sure to like the video down below if you want to see more of these, and subscribe to our YouTube channel to see the latest videos when released. And like I said, we have one of these bullish inverted J patterns right now in our newsletter, and it's probably one of the biggest we've seen in a long time. HA, Hawaiian Airlines, made that initial move of 100%, and that was a great start to the pattern. We've got another stock now that has made I think a 300% move or 200% move initially, and has formed a very well formed bullish inverted J pattern. It's just now breaking out and still near a very good entry point. So definitely sign up for the free trial and find out more about that. And it's in a red hot industry, and I think you'll be very interested in seeing that. Okay, again, that's it for today. If you want to try that free trial, just go to our site. There's an entry form there for your name and email. Just plug that in, set your password, and you'll see that great trading setup, or the latest trading setups that are in our newsletter over the past few weeks. And you also see the archive newsletters, all the newsletters over the past few years, so you can see exactly how each stock has performed since being featured on the site. And it's a great learning tool and a great resource for superb trading setups that have not only the best technicals, but also the best fundamental factors to go along with it to support the higher move. Okay, have a great day. We'll talk to you real soon.